Good evening, everyone. Welcome to the weekly webinar again. This is Wayne, Head of Research and Education. On behalf of Fullerton Markets, I warmly welcome everyone. So the webinar will be divided into three segments. We'll look at the first segment, what has happened in the past 1 week. Second segment, we'll move on to the calendar for this week. And finally, for the final segment, we'll move on to the charts to look for trading opportunities. Feel free to keep your questions flowing. I will answer them along the way. So for the events last week, there are quite very interesting events. Of course, the first one is UK Prime Minister Theresa May make her speech outlining her plans for Brexit. So as expected, the report that was out 2 weekends ago has proven to be true. So she is heading for a hard Brexit. At least that's what her plan is. To summarize the report, here's 4 points, which is highlighted in our weekly research as well. If you go to our website, you can access our weekly research. But I'll summarize and put the 4 points over here for your benefit. The first point from Theresa May's speech is they will give Parliament a vote on the final Brexit deal. So whatever the deal is, she will pass it through Parliament for approval, for a vote. The next one is she will aim for a phased transition. That means it will not be a abrupt so-called exit causing a lot of disruption. So you'll be in phases and to ensure a smooth Brexit. The third point is basically they want to seek a full exit from EU instead of partial here and there. It's basically they are totally out of EU. That's what she plans to do. And the last point is she said that UK will not propose membership of EU single market. So in case some of you are wondering what is a single market, what I have extracted from Bloomberg in the next slide I'll show you. This is a very interesting slide that summarizes the entire EU in a pictorial form. I think this will be easier to understand than just pure words. So as you can see over here, there are many Europe countries, Germany, Spain, Italy, including the Scandinavian countries like Norway, Iceland, and Turkey as well. And of course on the left hand side we have UK over there. And then you see the color lines that encompass different countries. Take for example the green Eurozone. You'll notice the green line encompasses quite a number of countries. On the left hand side is basically like a legend of the picture. So the green line represents the Eurozone, which means all the 19 countries that are using Euro as a currency. And then of course you have the purple one, European Union. So it is 28 nations, and what is a European Union? It summarizes on the left hand side as well. It means it's a single market of free trade and shared regulation. Includes free movement of goods, services, capital, and people. That means like for example, people can move around the countries freely. So for those of you who have been to Europe, you'll notice that when you travel from one country to another, especially those within the European Union, you don't need to go through any custom or even immigration checks. So of course you have other variations like the custom unions, so which is like the pink color line. So of course a different category will have different so-called rules and regulations and the purpose of it. So that's how European is being divided. So of course you can at your free time go through it and for general knowledge purpose. So this is what is the current setup of European Union or Eurozone now. So what happens is for Brexit, UK is planning to get out of all this. So they will have their own immigration regulations and policies instead of following the current one, which is standardized across the whole Europe. So this is basically what it means by a single market and also a custom union, purple color, where it only dictates the goods involved, whereby they pay the same duties and things like that. So that basically summarized Theresa May's so-called speech last week. Of course, the next one is basically ECB Press Conference. So Mario Draghi over here, as you can see, I did not extract a lot of words because the main point is over here in the subheader. Underlying price pressure subdued despite December picked up. So what you see over here is a chart extracted from Bloomberg that shows Euro area inflation rate. So it shows the inflation 5 years period. So you notice towards the end, which is the most recent, there's an uptick in inflation. By right, when inflation is going up, it is a good news for Euro, and it will be a sign or an indication for ECB to start considering tightening or reducing their stimulus. But what Mario Draghi mentioned is the uptick is basically due to a increase in the oil price that resulted in the uptick. So he basically mentioned that there is no so-called consistent trend to show that inflation is on the rise. So what it means that he wants, or at least ECB wants, to see more proof that inflation is picking up or steadying, going up, then they will start to consider their tightening. So for now, they maintain their monetary policy unchanged, as well as their stimulus. Okay, that's ECB. Of course, the last event, as the world is watching, is basically Donald Trump being sworn in as US 45th president. So of course, over here you notice that two interesting charts for general knowledge. So the first one is basically America first, and most often that means the chart shows, based on the past president, how many times has they mentioned America or American in their inauguration speech. So you notice that for Donald Trump, is the highest among all the president or the past president of America. And of course, the bottom chart shows actually the number of people viewing the inauguration. So you will notice the top is actually Ronald Reagan back in 1981, which they have 41.8 million views. And the second is actually Obama when he first sworn in 2009, 37.8 million view. So Donald Trump came in about 31 million view. So of course, some of you may be asking, Wayne, what has it got to do with the forex market? My answer is no, it's just for interesting numbers to look at. So what is interesting out of the inauguration speech of Donald Trump? So for those of you who have read our research this week, you will notice that there has been nothing much that we trader, or rather we currency trader or forex trader, is looking out for. Basically, we want to see what are the fiscal plans that he plans to roll out. So in his inauguration speech, there wasn't anything mentioned about fiscal plan. So some of you who have been watching the market, you will notice that there is a sell-off in the dollar towards the end of last week. So that's the main reason, because he did not mention anything about fiscal plan, which is what the dollar strength is about in the last at least a couple of weeks or even months. So there are hopes that Donald Trump will initiate a very aggressive fiscal plan to boost the US economy. That's why that comes about the dollar strength. But now, because of no news, nothing is mentioned yet, so that's why markets start to sell the dollar instead. But if you ask me, is it a disappointing sign? Of course, it is immediate reaction, but it is still too early to tell for now, because it's just the beginning. It remains to see in the upcoming days or months what are the plans that Donald Trump will roll out. So having said that, the dollar is expected to be quite choppy, or rather in a roller coaster ride, because there's no clear directions at this moment. So of course, the next thing besides Donald Trump's fiscal policies, the other thing is also a Fed rate hike. Of course, next week will be FOMC. We do not expect FOMC or the Fed to raise interest rate back to back. They just raised it last month. So we do not expect them to have a back-to-back rate hike at this moment. But their tone in their statement will sort of maybe give the dollar some boost if it is hawkish. And of course, if Fed switch to a more dovish mode, the selling in the dollar may continue into next week. So for now, what is being mentioned in his inauguration speech are mainly talking about things that he will do to policies that were implemented by Obama, like to get out of the Trans-Pacific Pact, and also to renegotiate the North America Free Trade Act agreement. So yes, these are the things that Donald Trump plans to do. So, but for us as a currency trader, the key thing to watch out for is basically what are the fiscal plans that he plans, or fiscal stimulus that he plans to roll out, that will have more direct impact on the dollar. Of course, on the politics side, whatever he does will have some effect to the economy and ultimately the strength of the dollar as well. The other thing that Donald Trump team has been doing, or reported that their team has been doing, is they have highlighted the excessive weakness in China currency, the China yuan, and also comment on their one China policy in a not so positive way. Of course, that would be that will so-called invite some unhappiness from China's side. So if they are heading towards that direction, having confrontational so-called intention with the second largest economy in the world, so we can expect quite a clash of a titan between the number one economy and the number two economy in the world. So if that really happens, there will be a lot of uncertainties and a lot of risk-off sentiments being generated. Definitely a lot of trading opportunity, and watch out for the yen as well. Whenever there's a risk-off, chances is the yen will benefit from it. Next, we move on to the second segment, which is looking at the calendar for this week. So for tomorrow, Tuesday, the thing to watch out for is basically UK court ruling. Okay, so this is the ruling that will decide whether Theresa May needs the Parliament approval before she can invoke Article 50. So as what the market is expecting is the court will rule in favor of parliamentary approval, meaning to say most likely Theresa May will need the Parliament to approve before she can invoke Article 50 to kickstart the process to exit EU. So this is widely expected by the market. So if the court ruling rule in favors of it, we could expect the sterling strength to continue for this week a bit more. So we have seen that the sterling has strengthened after Theresa May's speech. So later we will move on to the charts to take a look at any trading opportunities. So this is something to watch out for tomorrow, Tuesday. That could cause some volatility in the sterling as well. Next, on Wednesday, the news on afternoon 5 p.m. GMT plus 8 time zone. That will be the E4 business climate, German E4 business climate. So the market forecasts 111.3, a good number. So our recommendation is to put a pending long on euro dollar if the actual number comes in greater than 111.7. So why 111.7? If you look at all the historical data, if it comes in greater than 111.7, meaning it is at 111.8, it is the highest in the last 4 years. So if it is that high a figure, we expect the euro to strengthen a fair bit after the news. So this is our suggestion, pending long euro dollar, if the actual number is greater than 111.7. Next will be on Thursday. So for Thursday afternoon as well, 5:30 p.m. GMT plus 8, it will be the UK GDP. So it is a prelim GDP. So market forecasts 0.5% quarter on quarter. So the suggestion is on a pending long pound dollar, riding on the momentum, if the actual data is greater than 0.6%, meaning it way outperformed the market expectation and even higher than the previous figure. So this is our suggestion. Finally, on Friday, you'll be at night, 9:30 p.m. This will be the US GDP, US prelim GDP as well. So this is pending short dollar yen if the actual figure is less than 2%. So in the event that the actual figure came in worse than expected, 2%. This is to ride on the fear, the current fear in the market. And if the data is pointing to worse off direction, that means we do expect market to start scaling off any rate hike expectation, or even delay rate hike expectation to second half. So if that's the case, maybe the dollar yen sell off will continue. So this is our expectation. So our suggestion is a pending short dollar yen if the actual number comes in smaller than 2%, meaning to say it has to come in 1.9% or less. Of course, finally, something to take note of on Friday, you will notice there is a Trump and May meeting. So US President and UK Prime Minister is scheduled to meet on Friday. And what are they going to discuss about? Chances is possibly about after UK Brexit, what will happen, because if Theresa May is heading for a hard Brexit, meaning to say they will exit EU totally, all the existing trade agreements have with UK partner has to be negotiated again. That means all has to come up with a new trade agreement. And US, of course, is one of the major partner of UK as well. Definitely they will be looking at new trade agreements. And it will be interesting since Donald Trump has been mentioning about protectionism. So they want to protect US citizen benefits more and things like that. So it will be interesting what would be the outcome of the meeting. So of course, if it is a positive outcome, it may benefit the sterling. Or if there's a lot of negative so-called news or comments being made after the meeting, it may be not so good for the sterling. So do watch out on Friday. All this news will definitely cause some volatility in the market as well, both the sterling and the US dollar. So before we move on to the charts, just to highlight Fullerton markets. So this is one of our most favorite so-called bonus, the accelerator bonus. So for those of you who wants to check us out or have yet to open an account with Fullerton Markets, feel free to go to our website fullertonmarkets.com/promotions to look at this most so popular promotion that we have and take advantage of it. So we'll quickly move on to the final segment of the webinar, go live to the charts. So for those of you who has been attending my webinar long enough, you'll know that I will usually open the request to the audience. Feel free to type in any currency pairs, any time frame that you want me to go through. So while you are typing in your requests, what I'll do, I'll go through the charts that we have gone through last week. So 2 weeks ago, we had a considered very good week. As you, for those who have attended my webinar 2 weeks ago, most of the suggestions was heading towards the direction that we expected. But last week is what I would call a bad week for a trader, at least for me. Meaning to say, whatever direction I expect it to go, the market sort of go in the opposite direction. So a quick summary, we have talked about the event last week. For example, the first one is basically Theresa May's speech. It is expected that she mentioned that she planned for a hard exit, but the market did not react as what we expected, because for hard Brexit, it is basically not so good for UK economy, meaning to say it should be bad for the sterling. But because Theresa May put out a very clear plan and she assured that she wants to move ahead with a phased transition to ensure a smooth Brexit. So market decide to focus on that and put it in a positive note instead. So the sterling fell, but it rallied thereafter. So it was unexpected by a lot of people as well. So that's number one. Then of course, the number two is for Donald Trump. He did not really mention anything about fiscal policies that he intend to roll out. So that was another so-called surprise to us, because he has promised to roll out fiscal policies or fiscal stimulus to boost the economy. So that basically is two so-called surprises for us. So look at the charts that we have reviewed last week. The first one is Euro Yen. So I mentioned that the decision region is around 120.90. So the two blue box is where I suggest to go long and short. So market went bounced up from the support initially, but after that went down to break below. And you'll notice after about 8 candles after my webinar. Let me zoom in the chart so that it is easier for you to see. Okay, so red dotted line is the time of my last week's webinar. So about 1 2 3 4 5 about 5 candles later, market actually broke towards the lower box, but it did not close into the lower box until the 8th candle. So the 8th candle over here, as you can see, the bear actually closed into the blue box. So technically speaking, if you follow my suggestion, that would be a entry for a short. So of course it is a fake breakout over here. So immediately after the candle closed in that region, it reversed the other way. Then after that, it went on to go the opposite direction of going higher. So this was Euro Yen that we looked out for last week. So what is the lesson to take away from this? So usually there is something to learn when the market did not move in the direction that we expected. So typically for breakout trades, if we have traded the market long enough, once it happens, if it closes in the direction that you expected it to go for breakout trade, it should move in that direction almost immediately. But if you notice that the market close or wanting to close in the area that you want it to, but if thereafter reverse back the other way, as you can see over here, there's a bull candle with a long tail upwards. So these are the price action that is telling you a story that there are some uncertainty in the market. So sometimes for price action trader, what they will zoom in to refine their trades. I'll make the candle bigger so that it is easier for you to see. How trader would refine their entry along the way is when they notice that you notice this tail over here that went into the blue box. Of course, it did not close inside the blue box as what we wanted. And immediately the other candle that shot up all the way to another so-called possible entry for us, but at the same time did not fulfill the criteria because we want the candle to close inside or beyond before we take any position. So these two candles is a clue telling us there is some indecision in the market. So thereafter, some of the price action trader, they will refine their entry further. After what happens in the market, the next thing, they want the candle to close lower than the last shadow before taking a position. Because shadow basically is a story that the market tells us that there is some indecisiveness in the market. So if the price can go all the way down to this level and bounce back up, for market to make a decisive move, in a way, traders would want the candle to close below the last shadow, meaning it has to close into this region, highlighted by the second purple box. So this is a lesson for those who are trading the price action. This is something to take note of. So the initial criteria that was set during the webinar usually will have to be adjusted along the way. So of course, if some of you have taken the suggestion over here, I sincerely hope that you have placed a stop loss for your trade. Otherwise, it will be quite a big move against your position. And based on the current market now, you will still be in a floating loss. So usually when it goes into the other direction where market is telling you you are in the wrong trade already, it's best to get out with calculated risk. So this is the first fake breakout, so-called, that we encounter. based on the charts that we have looked at last week. So the next two charts, basically I mentioned that I do not see any reason to take a trade as UK PM is speaking tomorrow. This was the comment last Monday. So there's anything can happen. As you can see, the sterling rally after the speech. Market decide to take Theresa May's plan positively, even though she plans for a hard Brexit. Then of course the next chart is euro dollar. My comment is I cannot identify a possible decision area for trade last week. The fourth chart that we look at is Aussie dollar. So suggestion is the support over here at 0.7450 if the price close below to the region of around 7438, that would be a possible short for us. Of course, because of the disappointment towards the end of the week, Aussie dollar rally instead. As you can see, the dollar weakens towards the end of the week as well. The next chart is basically gold. So this is the comments I mentioned. For those of you trading candlestick pattern, possible entry at the open candle around 1202. So red dotted line, it appears, and there's a bearish engulfing candlestick pattern for a short. So even though it's a bearish engulfing pattern, it doesn't mean it will be a guaranteed profit trade. I mentioned last week that for those of you who feels that the momentum is against you because it is an uptrend prior to taking the trade, if you feel that just by looking at the candlestick pattern to take a short, you are uncomfortable, you can always give this trade a miss. Because after all, it is going against the predominant momentum. So of course, the other suggestion would be if the candle close above around 1211.00, around that region, possible to take a long. So you will notice the candle did close into the blue box and the price moved up thereafter. But the move was not sustained and prices starts to hover for the next almost 1 day. So this is another clue if you expect a breakout to continue in the direction. After a pause, it should go in your direction rather than pausing for a long time like this case. You will notice after the price move up, it sort of moved sideways for the next 7 candles. So this is a 4-hourly candle. 7 candle is 28 hours, which is more than a day. So if the price doesn't move within a day to go in your direction, it is a clue that maybe the momentum is dying off. Then you as a trader could make the decision to cut the trade early, or at least to protect your positions, shift your stop loss to your entry price. So in the worst case scenario like this, when the price decides to reverse to go back down, you will not incur a loss. You get out at least at a break even, risk free. The next 3 charts that we have looked at is basically the equities. The 3 equity chart basically behave quite similarly. If you later I'll go through. Both, almost all 3 give a fake breakout in a way. So for the DAX, as you can see over here, it has a very clear-cut support around 11530 that was highlighted last week. So there was an up arrow here to mention that possible to go for a long after so-called a bullish confirmation. So of course after that it wasn't any bullish confirmation. All of it, as you can see, the body of the candle is tiny. There's no clear-cut bullish candlestick formation to take a long trade. and there is thereafter on Tuesday at the opening of the market. When I say opening of the market, do bear in mind this is DAX, which is the German index, German stock index. So for stock index, it doesn't trade 24 hours a day, unlike the forex market. So for stock indices, basically it follows the exchange timing. So there's opening and closing every day. So the bear candle, very strong momentum pushed downwards, and the next moment a strong reversal back up. So it's sort of a fake break over there, and then it reversed back up for the DAX. So over here for the dollar index, sorry, not dollar index, this is the Dow Jones, my apologies. For Dow Jones, we mentioned that the Dow Jones is expected to consolidate within the range of 199.90 and 197.70. So let me mark the first vertical line is basically the time of the webinar, there about. Okay, during our webinar, the Dow Jones is basically in the middle of the range. We expect a consolidation, and of course towards the end of the week, there is a sell-off before Donald Trump inauguration, and after his inauguration there is a brief rally over there, a short rally, and then now price is hovering around the lower end of the range. So the suggestion for last week is if the candle closed below around 19735, possible to take a short trade. So you will notice this candle again went down and closed. There was the next candle that closed below the blue box. So technically speaking, if you follow our criteria, that would be the time to go short around the next opening, and price reverses for this is another fake breakout that we have encountered. So finally for Nikkei, okay, this is Nikkei. I'm going to zoom in, which also has a fake break. So you'll notice that when you trade stock indices, of course, different country, DAX is a German index, Dow Jones is a US index, Nikkei is a Japan index. So of course, different index, there's certain factors that is affecting it, local reasons. For example, things happening in Japan will affect the Nikkei. But at the same time, things that happen globally will have a generic or general effect across the indices as well. So as you can see, the three DAX, Dow Jones and Nikkei, all three behave sort of similar last week. All three gave a fake break and then head upwards. So this is another lesson for us as trader. When you decide to trade indices, when you see trading opportunities in a few indices and they are in the same direction, there is a time for you to manage your risk, because if there's a global significant event happening, it may have the same effect on all indices as we see over here. So very much summarized for the charts that we have looked at last week. If you ask me, this is typically one of my bad week. So some of you has been asking me, Wayne, how you classify a bad week in trading. As you can see, all the charts that we have reviewed last week, this is what I call a bad week. So is this the only bad week that I've encountered in the few years of trading? My answer would be no. So it is not the first bad week that I've encountered, neither will it be the last, to be honest. So as long as I'm trading the market, bad week will come. But at the same time, for those of you who has followed me for some time, you'll notice that I encounter good week as well. So most important thing as a trader, when you encounter a bad week, you have your risk management to protect and limit your losses. And when you encounter good week, you have your trailing stop to ride on the trend when you are in the right direction. So all in all, net off, as long as you make more profits than your losses, you'll be making reasonably good profit. Okay, so that's enough for last week's chart. Let me move on to this week. What do we look at? Let me look at the requests. So the first one is basically pound yen H1 chart. Okay, let's look at pound yen H1 chart. So this is basically pound yen chart. So the sterling has dropped towards the end of last year and then rebound since the start of the mid of January. So you see a strong rebound over there. So all in all, in a midterm technical, it is still bearish for sterling yen. But this is the H4 chart. Let's look at the request of a H1 chart. Okay, this is how the H1 chart looks like. After a strong push, as you can see, there is a consolidation over here. And then price move higher. So the momentum is sort of slowing down over here. So for tomorrow, there will be for this week there will be a UK court ruling. So if the court rule in favor of parliamentary approval for Article 50, there may be a short-term rally. But since it is what the market is expecting, the rally may not be significant to push it beyond the last high over here. So even though it is a smooth or phase transition kind of Brexit, at this moment there will still be a lot of uncertainty in the sterling. Ultimately, the fear of impact to the UK economy will start to set in again. So the celebration we foresee could be short term. So let us look at any trading opportunities, very short term trading opportunities. $141.23, very short term. This could be as you can see, there's a conversion over there. So instead of 1 hour chart, because this looks like an opportunity in a lower time frame, I will change it to 15-minute chart to refine it further. So this is the 15-minute chart. Okay, to give you an overall picture. So I'm going to zoom in. So the decision is over here. So as you can see, to refine the price action, so once candle closes beyond this level, possible to take a very short-term trade. Okay, this will be a pure technical trade. $141.35, that will be the level. So if the candle close above it, where the blue box is, possible to take a long trade, and the first target area is where the upper box is, referencing the body of the candle over here. So no worry, if you are looking out for the price, you can always look at the charts, because you will see the body of the candle. Just a few pips, like two or three pips, because this is a low time frame. 2 or 3 pips below the body of the candle, that will be your first target. So when I say first target, you have the choice of closing out your position, or you may consider doing a trailing stop, expecting price to go higher. Okay, so this would be the first suggestion for your consideration. Of course, for this one, it doesn't look like a very good risk reward, because the suggested stop loss will be based on the last low over here. This would be the so-called suggested stop loss. Okay, suggested stop loss is the place we place when we think most likely we are in the wrong trade. Meaning to say, this could be the same area for us to consider going short. So meaning to say, if the price did not go up, it come down instead and close lower. Okay, instead of too many boxes, I'm going to change the color to avoid confusion. Okay, the suggested stop loss, I'll put it in purple color. So this is the current candle, just for our reference. So since the decision region is this line, which is 141.25, sorry, 235. Okay, 141.23. That will be the so-called decision region. So if the candle closes below where the blue box is, so the blue box is about 141.15. Okay, that will be a place for you to consider to go short. And of course, for this, your first target would be slightly wider over here. Okay, as you can see, the body is lower for a short trade. So chances is the first target is lower as well over here. Okay, so this would be the suggestion for pound yen. Okay, because this is a short time frame trade. So it may happen in the next half an hour or so, or even 15 minutes, depending on how this candle close. So that's pound yen. I know that the request is to look at the 1 hour chart, but the 1 hour chart, from what I see, it gives instead of a 1 hour chart, I think the 15-minute chart is able to refine the trade further for an earlier entry. Okay, so this will be a pound yen. Let me just scan the next request. The next request is pound Aussie. Oh, pound again. Okay, let's look at pound Aussie. It has a similar pattern like pound dollar that we have looked at earlier on. So a very strong drop, and now the price is recovering upwards. So the court ruling again may cause a slight so-called uptick on the pound Aussie. Short-term rally after the court ruling could be, but the overall momentum over here, as you can see, is still downward. The concern will always be what is the actual impact. Of course, no one will be able to tell or assess it until further negotiations are taking place. So for now, there will still be all the speculations and fear on how bad would it be Brexit on the UK economy. So all in all, if you ask me, the pound Aussie, there's no request to look at any time frame, so I'll just base on what I see on the chart and select a time frame to trade. Okay, the price action is actually telling a bearish momentum over here. So of course, if we just consider the bearish pattern again to take a short trade, okay, the prior momentum, it is still going up, as you can see over here, the predominant momentum. Very strong uptick over here, retrace, consolidate, and then start to push up again. And it pushed higher than the last high over here. So to summarize the momentum, it is predominant, still bullish momentum based on price action. So to take a short trade over here would be considered risky. So I would rather wait for something like this to happen. Okay, I'll mark some areas first. $1.6430. Okay, this is the decision region, possibly. For me to tell that there is a possible change in momentum, I want a push upwards. Push up to whichever level, as long as it's not higher than the previous high over here. Okay, this is the previous high. So a push up to whatever level. and then start to push back down again. So what I'm marking is the current candle. So this is what I want to see in order for me to decide a short trade. So if the price push up, and then next thing, I don't know how many candles, if after a few candles it push back down and close below 1.6430 into the blue box here, which is around 1.6410 plus minus. That would be our place to go, possible to consider to go short. Okay, so this would be the Pound Aussie H1 chart suggestion. The next currency pair that I'm seeing on my chart. Oh, pound dollar. Wow, a lot of sterling requests. And do watch out, for the first three charts that we are looking at are all sterling pairs. So it would mean that they are correlated. If you are going in the same direction for all three pairs, that means manage your risk. There's a high chance that all three may hit profit or all three may hit stop loss at the same time. So for pound dollar, the request is M30 chart. Okay, to me, M30 and H1 chart is very close sibling, because two candles of M30 will make up for hourly candle. So usually M30 and H1 chart looks pretty much the same. I personally prefer to take trades on the hourly chart instead of M30. I hardly take any trades at all using M30 chart. That's my personal preference. So back to, since the request is on M30, I will look at M30. So this is M30 chart. So M30 is showing a brief consolidation after an upward momentum. So price is creeping upwards but failed to go higher. Okay, the low is getting higher, interestingly, but the high is not getting higher. So when I say the low is getting higher, I'm referring to this. Okay, I'm going to zoom in so it is easier to see there. So as you can see, what I'm drawing the trend line is just for visual guidance. This is what I mean, the low is getting higher. Okay, but the high seems to pause around this region. Okay, more conservative, let's put it as 1.2465. Okay, in the middle of all the shadow there. So for pound dollar, like I say, court ruling, watch out for the court ruling. So if the court ruling is expected, possibly pound dollar may have a brief rally upwards, maybe towards the 1.2465. We do not expect it to really breach a lot higher because the market is already expecting that kind of court ruling. Of course, in the rare event that court rule against parliamentary approval, then we would chances is we will see the sterling falling. much significantly than how it would go up if the ruling rules in favor. Why? Because the actual is not what the market expected. So let me repeat, if the court ruling rule against a parliamentary approval, which means to say UK Prime Minister do not need Parliament approval to invoke Article 50, then chances is market will start to sell the sterling. Because that is not what the market expected the court to rule. So if the court rule in favor, I do foresee maybe the rally to be brief, but it may not push it significantly higher beyond 1.2465. So I would rather look for a potential chance to short it. Of course, for a very conservative short, will be over here. It is sort of reversing a confirmation, a lot of confirmation, because price went really low over there for a short. $1.2405. So for those of you want to see more confirmation, then it's all the way price movement all the way down that breaks all the few recent lows. Then possibly it is a confirmation for the price to go further down. That would be a consideration to go short. So red vertical line is the current candle. Of course, a more aggressive short will be if it closes lower than this low over here, which is around 1.2418 plus minus that region. Okay, so this would be the two suggestions to short the pound dollar. Okay, so for the next currency pair would be a silver. Okay, it's not currency pair, basically it's silver. Let's look at silver. Okay, over here is a silver H4 chart. Okay, I'll mark the levels or the regions first, then I'll zoom in for better visibility. So the region is about $17.20 for silver. So price failed to close higher. Of course, one of the factors affecting silver is definitely the strength of dollar. So there's the prior momentum is still upward momentum until it hit this so-called key resistance around 1720. But do watch out for silver. Is known for his volatility, just like gold. So these are the shadows to watch out for. So if you trade a volatile instrument like the silver, you need to set a more conservative stop loss. At least I usually do a more conservative stop loss to avoid getting hit by all these sudden movement or shadows. So this is something to take note of. So now let's look at the chart. I'll zoom in and take a look at the zoom in. Yes, okay, zoom in to take a look at the near-term so-called price action. So over here, a shadow and price retrace, and now price is pushing upwards again and failed to go beyond and start to retrace down. Over here, this candle, there's a fight between the bull and the bear. As you can see, the body of the candle is very short, very small. So usually when body is very small and the shadow is relatively longer, it is telling us there's a fight between the bull and the bear. Uncertainty. Market cannot decide where it wants to go. So the decision region that I see over here would be around $17.05 plus minus. Okay, thereabout. So that would be as you can see, the range or the consolidation is very tight, leaving us with very little room for maneuver. So this is a H4 chart. So one suggestion would be to scale it down to a lower time frame, like what I did in the earlier pound yen chart, to refine the entry further. So this is how it looks like on hourly chart. So let me shift the label a bit. Okay, pardon me, I just take a few seconds to adjust all these markings. Okay, you notice this is how the chart looks like. And over here, what you see on the chart, you will see two lines. One is a bid, one is a ask. So this is telling us the spread of the instrument. So for silver, this is how the spread looks like. Okay, this is our typical spread. And the spread also will tell us if our range is this much. And the spread is already such a big portion. It is telling us it may not be so profitable for us as a trader to trade it now, because the market is not that volatile to give us significant profit, and the spread is what we pay as a trader. It is like a trading cost. So it's a cost of investment in a way. So if you look at it, the kind of movement over here is this much, whereas the spread already accounts close to 1/4 of it, which means it is telling us even if it gives us any trading opportunity, it is not so profitable. It may not give us such a good profit margin to take a trade. So for H1 time frame at this moment, I don't see any potential trade to take because of the spread. So I want the market to be more volatile, a bigger move, then possibly to give us a better profit margin. Okay. So another way, instead of trading it in a low time frame, you trade it in a higher time frame, like what I did, what I'm doing now, daily chart. So once I change to a daily chart, you'll notice the spread becomes insignificant. It doesn't mean the spread has changed, the spread is still the same. It's just that when you go on a higher time frame, the typical move that you are looking out for is bigger. You don't take small move. So when you take bigger move, the spread becomes less significant. That means your cost of investment or trading becomes relatively lesser. So the decision region remains unchanged at 17.2. Here comes the potential trade that you can consider when the price close above into the blue box above the shadow. It is about 17.35, 15 cents above the decision region, thereabouts. So of course, if there's a further weakness in the dollar, reasons for, if the next 1 or 2 weeks there's more reasons for investors to sell the dollar, then possibly silver may push beyond 17.35. So of course, the other way around would be if the candle close in this region, possible to go short where the shadow is. Because of the long shadow, I do not want to place it so way below because it's very long, relatively long shadow over here. So as long as, to me, if the candle close towards the tail end of all this shadow, it would be a good confirmation for me to short or take a short trade on silver. So the price is around $16.80. Okay, so this would be the a long term, because it's a daily chart, so this is considered a high time frame trade, possibly a mid to long term trade. For your consideration, I'll zoom in so that you can see this is how it looks like. Again, I'll put the vertical line over here, the current candle. So that's silver. The next currency pair, Kiwi CAD. That's an interesting pair. Kiwi CAD daily. Let's look at Kiwi CAD daily. Okay, for pound yen, just quickly, since it's a low time frame, you'll notice very fast 2 candles has appeared. This is very interesting. You'll notice the candle barely reached the green box that I have drawn, so it doesn't really fulfill the criteria to go short. So it has to close into the box before it gives before it meets my criteria to go short. So now candle is reversing the other way. So let's see where it is heading, maybe in another candle or so. before the webinar ends. So let's look at KiwiCAD. Okay, daily chart. The request is for me to look at the daily chart. Okay, this is a daily chart. Short-term bull is pretty strong. If you notice, after a pause over here, candle is pushing up again. So seems like the bear is just a pause whereby all the investors or traders that has taken a long position along the way here, after the shoot up, definitely at a certain point in time they want to take profit. So the bear candle over here is telling us most likely it is the result of profit taking activities, because if it is a reversal kind of scenario, the next few candles should be heading downwards. But instead, after profit taking, you will notice the bull comes in to buy the KiwiCAD again. Now it's pushing higher. So if you ask me, just looking at this part of the chart, I'm more inclined to take a long position. Sorry, I have activated the volume. Okay, let me deactivate that. I'm inclined to take a long position on the KiwiCAD. But let's look at the lower time frame to refine the entry. So this is how it looks like on H4 chart. So market is consolidating, so if we enter now, most likely it will hit into the immediate resistance region over here. So going to long lower time frame can help to refine our trade. So 0.9590 is the decision that I see. So meaning to say I want it to close beyond before taking a long position. Of course, the other way is true as well. This is also a straddle kind of a situation. So if price failed to close higher or beyond 0.9590 into the blue box, then possibly if it doesn't go into that region and start to come back downwards, it could be a fake breakout. So you will notice the consolidation is not very big in the overall chart. It is 60 pips over here. So for those of you, if you are trading even a lower time frame, if you are trading lower time frame, meaning it's H1 or lower, you could consider applying range strategy if you know of any. So consider applying range strategy within this range. Okay, while the price is hovering between 0.9590 and 0.9530. Okay, let me add the words. Okay, so this is Okay, consider applying range strategy in lower time frame when price is between these two price. Okay, so that's a long suggestion, and of course the other one would be once it goes beyond the other decision region would be a short suggestion over here. Okay, so this is Kiwi Cat. Okay, time flies. We are coming to the end of the webinar again very fast. Let me take a peep at sterling yen again. Interestingly, the tail went into the blue box. Candle failed to close. So a lot of indecision activity over here. So for those of you watching the market, maybe for the next few candles, it may give us an entry that fulfill our criteria. So before I end off today's webinar, let me make a quick announcement. So Fullerton Markets is launching a new series of webinar. It's called Trade to Win. And this week we are having the first one. It is a special edition. The topic is 7 trading themes for 2017. So for our Fullerton Markets clients who had a live account with us, you would have access to Fullerton Suite. And in there, you just go to Documents. You will find the downloadable PDF of the 7 trading themes for 2017. But what we are going to do for this week on the 25th Jan, which is Wednesday, same time 8 p.m. GMT plus 8 time zone, I will be holding a special edition webinar to talk about the 7 trading themes for 2017. So of course, you are more than welcome to attend and look out for the registration link on our Facebook page as well. So that's the first announcement. The second announcement is Chinese New Year is approaching. So for next week, we will take a break from the weekly webinar. So the webinar will resume on the 6th of February. So on behalf of Fullerton Markets, once again, I thank you everyone for your patience and your attention. And look forward to seeing you in our next webinar, same time, same channel. So this is Wayne signing off. May the pips be with all of you. Good night and bye-bye.